I'm joined today by Stephanie Mumford. She is a shareholder at Teal Becker and Charmonte CPAs, where she specializes in commercial and governmental audits. TBC is the largest capital region-based CPA firm on the ABR list, and they are celebrating their 50th anniversary. Welcome, Stephanie.
Hi, Walter. Thank you for having me today.
Well, let's get right into it, and let's start with financial statement reporting. Are there any upcoming significant changes that businesses should know about?
Walter, there's definitely a big change that's coming that private companies and not-for-profit organizations need to know about in regards to lease accounting. So for December 31st, 2022 year ends for the first time, there's going to be a new standard that's going to revamp how leases are now accounted for on companies' financial statements. The standard applies to long-term leases, so leases that are 12 months or less do not fall under this new standard. But the purpose of the new standard is to essentially bring most operating leases that are currently accounted for on or off balance sheet, they're going to bring them onto the company's balance sheet. So just as a quick frame of reference, under the old lease standards, if someone had an operating lease, there's nothing reported on a company's balance sheet, and the lease payments were simply just expensed on an income statement as they were paid or became due. Under the new standard, most long-term leases are now going to be reported on the company's balance sheet. So a balance sheet is going to look extremely different than it has in the past. So the balance sheet will now have what was called a right of use asset, which is simply the net present value of the remaining lease payments. This is always going to be shown as a long-term asset on the balance sheet. There will also be a corresponding lease liability. This particular item will have a short-term component, so those amounts being due within 1 year. There's also a long-term portion that will now be presented. So it's critical for companies to understand that their balance sheet's going to look different. There could potentially be effects on debt covenants. So discussions with your lenders, your bankers is going to be very important as we navigate through these new changes, as loan agreements, debt covenants may need to be looked at and maybe even changed at the lender level. So it's anticipated that most companies will actually elect to implement this new standard is what we refer to as a modified retrospective approach. What this approach allows is for the company to implement the standard in the beginning of the current year, so effective January 1st of 2022. And what will happen then is that you won't have to restate the prior year. So this usually ends up being the most cost-effective manner in order to implement a new standard when we can do this modified retrospective approach. What will essentially happen is that on the balance sheet, your current year balance sheet, so your 2022 numbers, are going to show this right of use asset and also the corresponding liability. And if you have a comparative financial statement, which many companies do, the prior year that's presented on that statement isn't going to have this asset and liability. So you're going to kind of have a apples to oranges situation in terms of comparability on your balance sheet for just this 1 year of implementation.
I mean, when you think about it, what should businesses do now to be ready to implement the large change surrounding lease accounting?
There's a lot of things that businesses should be doing now. So the number one thing that they should be doing, if they haven't already, is they should be talking to their accountant and their CPA about what impact this is going to have on their company. They need to, strategize and kind of work on a plan in order to gather all the information. The snapshot that I just gave you of what this lease standard is very high level. There's a lot of nuances with the standard. There's a lot of detail that's involved. So companies need to start gathering all of their leases. That's the starting point. Let's gather our documents. And it's not just the leases that a lot of people think. You even need to start looking at your service contracts. So under the new standard, the standard essentially has changed the definition of what a lease is, at least in terms of accounting definitions. So a legal document that says lease on the top might not actually be a lease under the new standard, but a service contract that it says service contract on the top, it doesn't say lease anywhere in the legal document, might actually be a lease under the new standard. So gathering the information, reading the documents, trying to understand what types of arrangements your business actually has is the first starting point. And I don't recommend waiting until it's after year end and you're your CPA is there and it's February and we're doing your work, that's too late. Especially if, as I mentioned before, your balance sheet's changing. It could affect loan covenants. You want to kind of do preliminary calculations now. All right, what is this going to look like on my financial statement? And if you think you're going to have loan covenant issues, let's talk to your lender now. We don't want any surprises at year end. So these are the things we really need to start talking about now in addressing.
Yeah, and it sounds to me like what we need to take out of that as a business community is to consult our firm sooner than later. So thank you for that. Let's switch gears a little bit and talk about cryptocurrency. Now, there's been a lot of talk about cryptocurrency and how it's taxed. Can you talk a little bit about how cryptocurrency can impact a company's financial statement?
Yeah, Walter, this is a great question. Especially recently, there's a lot of talk in the news about cryptocurrency and what's going on with things such as Bitcoin. So it's gained a lot of popularity, and we're really starting to see a lot of companies invest in cryptocurrency, where maybe in the past few years, it was mostly just on an individual basis. So now it's starting to impact financial statements. And the accounting of it isn't really what I think people anticipate. I think most people anticipate that it's an investment and we're going to account for it on our financial statement as an investment. In actuality, it doesn't meet the definition for financial statement reporting purposes as an investment. It's considered an intangible asset, and that has dramatically different reporting obligations than an investment does. So under an intangible asset, you record the asset at historical cost, so the cost that you paid for it when you bought it. And then it periodically needs to be evaluated for impairment. So if the value of the cryptocurrency, and if you've been following the news, it's volatile, it's up and down, it's all over the place. So when you evaluate it for impairment, if the value has actually gone down, you have to write down your asset on your balance sheet to that lower amount, and you're going to have a loss on impairment. But what happens then is that once you've written an asset down for impairment, you can never reverse it. So you can never write it back up. So if the value goes back up in a subsequent year, you're stuck at that lower level. And the only way you can recognize the gain is if you actually sell the asset.
That's good information. Now, annual audits are coming up and reviews. Do you have any tips for businesses that you can share to help them prepare for their annual audit or review?
Sure, I have lots of tips. So not to sound like a broken record, Walter, the number one thing that I think people need to do is they got to go back and work on the lease standard, gather the leases and those contracts and take a good look at them. But in addition to that, what people can do is, have your reconciliations of your key financial statement accounts prepared and ready to go, and have the supporting documentation for any significant reconciling items. So having your cash accounts reconciled, accounts receivable, payables, inventory, your accrued expenses, having all that stuff ready to go and already completed and available when the CPA starts that work is something that, you kind of take for granted that that's going to happen, and oftentimes it doesn't. So that's kind of like the number one thing. Also having any other new agreements you may have entered into the year available and ready to go, such as a new loan agreement, debt agreements, anything of that nature. Having your fixed asset schedule updated. A lot of clients wait until it's after the year end and it's like, all right, I bought these 50 new assets and now we're spending a lot of time updating fixed asset schedules. You can send those to your CPA or your accountant ahead of time. There's compiling any information you may have related to related party transactions, because we always have to have significant related party disclosures in the financial statement. So having all that information already compiled and ready, especially if there's any new types of transactions that were entered in during the year. And then the other biggest thing is just communicate with your accountant or your CPA. Communication is key with any relationship. So especially if your accountant's not reaching out to you, you should be reaching out to them, talking about your business, any significant changes in your business. So the more communication we have, the better off the client and the accountant will be.
Yeah. Well, thank you very much, Stephanie, for joining us today. Your insights are invaluable. The information you share with us is extremely important to our audience. Congratulations on your 50th anniversary for Teal Becker and Charmonte, and we appreciate you joining us. Have an awesome day.
Thanks for having me, Walter. It was great speaking with you today.
Thank you.